Srivastava, founder Indiacharts and Strike Money, to take a few questions on what the markets are looking like from a technical and the charts point of view as well. Rohit, good morning. Thank you so much for joining us. We had spoken to you on 21st of November. You had indicated that 26,050, 26,000, that could be an important support level from which Nifty could bounce back. But we are way below that now. And even mid-caps and small caps, you expected them to bounce back. What went wrong in last 15, 20 days for Nifty to see that fall, especially in the last 3 days where we are seeing relentless selling that has come by?
Yeah, so it's essentially been the broad market that has caused the trouble. And yesterday we saw it spill from the small cap to the mid cap. So that is the first stage of deterioration that we saw. We haven't still seen it go from mid cap to large cap because the Nifty, while it may have broken 26,000, I'll put the major support at around 25,000, 880 to 870, somewhere there. And 800, I say 20, let's say 25,800 to 27,770. Yeah, that's the correct point. So 25,800 to 25,770, that range, if we hold, we definitely get a bounce over the next 1 to 2 days. So that is at least the short term, volatility will cool off. And if you look at the RSI of the small cap index, it has actually, fallen to around 23, 22, which is an extremely oversold reading. Our own Nifty proprietary swing indicators down to around 11. Now, if it was single digits, it would become a screaming buy. But even at 11, we say it's pretty oversold for a pullback. So a pullback is definitely on the cards here over the next, 1, 2, 3 days. The question is what beyond that? So therefore, once we do see that pullback, what we really want to see is that the whole market starts to recover. We want the Nifties to start sustaining again above the 20-day average. And once we see that, then the comfort, would mentally return, for the market to go back to new highs. But let me just put out this that because of the breakdown in the small and mid caps, we have created some potential risk, not confirmed yet, that the Nifty can maybe retest, 25,500 or 24,500, but we can't be sure of that. This would not spoil the long-term picture. But if there is, further selling after a bounce in the mid and small caps, it can even spill over to the large cap. Is a risk that we'll watch out for in the next 2, 3 days. But definitely, I think we are very oversold here. We should get a pullback.
Rohit, so both sides of the question. So once you're trying to say that if this selling pressure in the broader markets continues, you may have that risk of the Nifty falling towards 25,500 or maybe even 24,500 on the downside, if I interpret that correctly. The second bit of the question is, since you mentioned the mid and small caps, that has been the talking point for the last couple of weeks, that weak market breadth, that deteriorating market breadth. Is there anything that is emerging on the charts on either the mid caps or the small caps that this selling, that relentless selling that you have seen in the broader markets is coming to an end, or at least slowing down, if not ending?
I definitely think you're at the fag end, because when I scan across stocks, the RSIs for a lot of these individual stock names in the small cap, and even the good ones which we are tracking where earnings are growing at 50 to 100%, and the P ratio has dropped to like 40, 30, 20 because of the growth. Even these stocks have taken a hit, and their RSIs are going into 24, 23, 27. So they're all getting oversold simultaneously. So it does create a case that, this is not a point at which you should be selling. In fact, it's an opportunity to buy. So I've already started nibbling some of these stocks in that group today. But what I'm just trying to highlight is the near-term uncertainty that we are not clear of. It's possible that this is it, the worst is over today, and things just return to normal in the coming days. But just want to leave that open for a day or two to be able to be, doubly sure. If I look at breadth indicators, so as you asked, that is there something telling us that it's gotten as far as it should? The 20-day advanced decline ratio has entered the typical, very oversold territory. But it's still there, it still has to bounce out of that. So while we see it there and we feel that, yeah, this is an extreme, even if we look at the number of stocks in the small cap index, which are above the 20-day average, that has come down to almost single digits, so that means most of the stocks are below. And that is again sometimes a near-term indicator of a potential bottom. So we have a lot of readings coming together. But is there something else? Because what happens when we look at things like RSI, the market bounces back for 2-3 days. These indicators come out of their oversold territory, and then another round of selling shows up. That's the only thing we want to really avert. And that's why I said that we'll watch it for the next few days from what looks like already a very oversold condition.
Okay, what looks like an oversold condition. By the way, there is some recovery which is underway in the mid caps and small caps. Those two lines, the advanced decline ratio, they're almost converging. So we'll watch out for what kind of gains or recovery we see from the lows of the day. Mid cap index is at the day's high. Small cap index too briefly turned into the green as well. Rohit, you mentioned that maybe the worst is over. We could see it for next 1-2 days. For the near term, there could be some pain, but that might not continue. Which are some of the sectors which could contribute to the recovery from here on? You had indicated banking is one of them which should do well. Do you continue with that thought?
Yes, I think the interest rate sensitive sectors, so that includes financials, followed by autos, followed by metals. I think these segments are due to do pretty well. I'm not sure real estate right away, but at some point of time, as you continue to have rate cuts, that also gets affected. But these three would be top of the mind: banking, autos, and metals, to see a positive impact of the rate cycle. So financials definitely have been outperformers over the last couple of weeks, and on a pullback, there would be opportunities. There may be some rotation because you've seen PSU banks, for example, do exceedingly well. It's possible that private banks that were lagging behind or had pulled back in between now start performing. They have held up pretty well. If you look at the likes of ICICI Bank, HDFC Bank, or Kotak Bank, they've actually hardly fallen in this 2-3 day sell-off that we've seen in the broad market. So they are showing exceptional strength, and any holdout would mean that they actually start doing much better than other parts of the market.
The Nifty bank has turned positive, showing on the Nifty as well now. Rohit, just before we let you go, very quickly, if you could tell us about the EMS names. Suddenly from the street darlings, they have suddenly become the knife, the falling knife you don't want to catch. Is this a time to nibble into these EMS names, down 40-50% from their peak, the Canes, the Sirmas and the PG Electroplasts?
I would think so, because growth stories don't just end in a whiff. We have to first believe that we are in a bull market, and typically the themes that kick off a bull market continue to remain and be there till the entire course of the bull run. And so I don't think we are at the end of the bull run, and that means that as in when you get good opportunities on declines in any of these key sectors, EMS, or whether it's defense or PSUs, which have been really beaten bad, they are good investment opportunities.
Okay, take that point. A lot of factors that go into buying a particular stock as well. So markets may be factoring in a lot of those other factors right now. Thank you so much, Rohit, for joining in today and taking us through your thoughts on what the markets are looking like. We'll slip into a short break. When we come back, we'll focus on the bond market with Manisha Gupta. Stay tuned for that.
"26 years of CNBC TV18.